In late 2017, TABCORP was riding high after swallowing arch-rival Tats Group to create an $11 billion dominant wagering and gaming business. The new business was supposed to both dominate Australia and expand offshore. However, 18 months after the merger, the share price has drifted down from $5.60 to $4.60. Does that make it a buy? Hugh Dive from Atlas Funds Management is here to answer that question. Hugh, what are you thinking on TAB? Is it a buy or is it a sell?
We like it. With the share price fall, it's given us a fair bit of margin of safety. TABCORP passes our quality filter model. We like TABCORP's lotteries business, which has sort of long-dated licenses with an average expiry of around about 2042. So that's well within most investors' investment horizon. And this gives the company quite stable and defensive earnings. They've grown an average of 4% over the past 25 years. We see TABCORP as pretty good value, trading on a fully franked dividend yield of 5% with an EV to EBITDA margin of 11 times. There's a range of new near-term catalysts for re-rating the stock, namely synergies from the TATS merger and improving in wagering profits coming from some regulatory tailwinds. I think it's Australians love a bet.
Well, let's get into some of those details. But first, can you explain where TABCORP came from?
Very complex. So a lot of mergers and acquisitions to create the beast that sits on the ASX today. So in the 1960s, Victoria and New South Wales TABs, or Total Action Boards, were created, and this legalised off-course racecourse betting on horses. TABCORP was listed on the ASX in 1994, operating a wagering, which is betting on horses and sports, and a gaming licence in Victoria. And in 1999, TABCORP acquired Star City Holdings, which is the City Casino. And in 2004, it acquired the New South Wales TAB Limited, giving the company exposure to wagering in New South Wales. The big merger, which, as you talked about a bit earlier, was in 2017, where TABCORP merged with TATS, using a combination of cash and shares to give the company exposure to lotteries, as well as wagering in Queensland, South Australia, Northern Territory, and Tasmania.
So what's the breakdown of this company with wagering? There's a few different components.
Yes.
What are the breakdowns?
So the wagering division, that's betting on sporting events, mainly horses. That's around about 40% of the profits, and that's the totalised as a monopoly on the tote licence holder in New South Wales and Victoria, and also operating fixed odds racing and sports betting in those states. It has around a market share of a bit over 60% of wagering in Australia, both sort of online and retail. The other businesses are lotteries and Keno, and that's about 50% of the profits. And these businesses hold monopoly license to run lotteries in all Australian states, except for Western Australia, which is still run by the government. And the residual is gaming services, which are about 10% of the profits. And that is a good annuity business which monitors and maintains electronic game machines across Victoria, New South Wales and Queensland, basically making sure that the pokies are monitoring on behalf of the government.
So the business model is kind of the question here is, there's a lot of different components, but how does that filter through to profits for the shareholders?
Well, the business models is a very sort of very interesting and also sort of quite simple. And I think if you look through it, it's one of the reasons why I think I prefer to own a gambling stock than actually gamble myself. So the business model for wagering is just quite simple, and actually doesn't relate to the probability of a horse winning a race or the Wallabies beating New Zealand. The business model for running a wagering book revolves around balancing this book on any event they're betting on and people taking bets on. So if there are two sporting teams going head to head, say Australia versus South Africa, and TABCORP sets the odds at 1.9 for every dollar bet and takes $1 million bets on both Australia and South Africa, TABCORP will have a guaranteed $100,000 profit regardless of the outcome. The business model in companies is much more interested in market demand for backing teams or horses and varying those odds to create that demand to balance the book, rather than the actual chances of winning. So in Australia, TABCORP have a wagering market share around about 62%.
And how about the profits from the lotteries?
Lotteries is a much more even simpler business model, and it's actually one of the oldest forms of gambling, with the first recorded signs of lotteries being Keno slips from the Chinese Han dynasty between 205 and 187 BC. Indeed, these lotteries were believed to have helped finance major government projects such as the Great Wall of China.
So that's quite a history.
Yeah, quite a history. One of the oldest forms of gambling. So here, the lottery owner, in this case, TABCORP, sells tickets on a lottery where individuals can pick numbers. We're all aware of that, and then chosen at random. So out of roughly about 50% of the total amount raised, so if they raise whatever, $4 million, $2 million maybe go that into the prize, it goes to the winner. Around about 40% of that, the rest goes to the government. It's a very tax-heavy business, and also retailers, with TABCORP retaining the approximately 10%. As you can see, there's very little business risk in the actual business of running a lottery, somewhat sort of guaranteed returns.
And what are the other expenses in the TABCORP mix?
Well, TABCORP is actually sort of closer to a toll road than a normal industrial company. So there's minimum ongoing maintenance capex outside of the large payments to governments over sort of 10 or 20 or 30 years to secure licenses. For example, in 2017, TABCORP, the company paid the Victorian government $120 million upfront to secure the rights to run the Victorian lottery until 2028. Other sort of ongoing costs are the taxes being paid, annual taxes being paid to the government, and also the costs to actually sell the lottery tickets, commissions paid to newsagents, etc.
Atlas Funds Management's known for the quality filter model, and you'd mentioned applying that to TABCORP to come to this decision. Can you apply the financial analysis tool and start there with how that's looking for TABCORP and their leverage?
Well, yeah, so looking at the leverage, TABCORP scores very well. Its financial leverage is relatively conservative geared, given the stable earnings, and with gearing only at 32% and interest cover of 4 times. This is a business that can actually handle a fair bit of debt. In that, so that as the lotteries business is very gambling business are very stable. Indeed, sort of during the GFC, there was no change. The lotteries business actually grew quite slightly in that sort of downturn. Also, something we also look to is the spread, what the debt looks like. So here, the spread of debt maturities is good. With recently, they refinanced a lot of their debt by placing $1.8 billion in the US private placement market, and that was done at sort of very attractive fixed rates with maturities spread evenly between the next 8 and 18 years.
18 years sounds rather long. Is that abnormally long for a loan?
It's normally long for a loan if you went front up at Westpac or ANZ, but the long term reflects the terms available in the US private placement market, which is very different to what Australian banks will offer. So here on the US private placement market, we have lenders such as insurers that have long-term liabilities that they look to match with sort of long-term illiquid assets, such as the private placement of these TABCORP bonds. So that's not particularly, that's roughly about standard, but much longer than you can get from a bank in Australia.
And you'd mentioned the expansion, so running through the Atlas quality filter model, there was the expansion, TAB coming together. How do you rate that overall expansion of this now conglomerate?
Yeah, well, normally what we do, one of the concerns that we look at expansion is if companies are expanding quite rapidly, both in revenue and assets, buying new sexy assets offshore, mistakes can be made. I mean, a classic example of that was perhaps Bunnings' foray into the UK, which blew up sort of $1.8 billion in about a 14-month period. TABCORP has seen a substantial expansion of assets and revenue base over the past 5 years, but all of this is a result of the merger in 2017 with the rival TATS to create a company that now controls over 60% of the wagering market. I mean, normally this would result in a bad score, but here it's the result of consolidation of industry the company very much understands, and also buying into a monopoly business, lotteries, and a near monopoly in wagering in their home market, taking out a rival. Scores well here. This is not some expansion into a weird offshore environment. This is taking over a sort of a hated domestic rival, which is a good thing.
And the corporate governance, what's the board look like?
Here, the composition is very good. So what we're looking at here is disclosures, independent chairman. TABCORP, I've got 7 out of 8 board members independent. This is probably not surprising given the heavy level of government scrutiny of gambling companies. They couldn't get away with the board structure of Harvey Norman, a lot of non-independent parties. This is an industry which the government looks at very closely, so they've got to have very good disclosure. Also, something we look at is executive remuneration. That's appropriate for the size and complexity of the company.
You've mentioned the government many times now, so that leads us to regulatory risk. And you've mentioned a lot of taxes to pay as well. How do you view the whole regulatory risk for TABCORP?
It's very interesting. So gaming, like historically, attracts a lot of undue government regulation when they see some of these gambling companies as a piggy bank to be raided during bad times. And this has been an issue in the past. So in 2008, both TABCORP and TATS, which was independently listed, were both surprised by the new Victorian government's decision to end their duopoly over poker machines in Victoria. And that resulted in a lot of unsatisfactory litigation. That was ultimately settled, but that's the danger there. However, the regulatory environment has been quite settled over the past decade. And indeed, so one of the things we're attracted to TAB is some of the recent regulatory changes that are actually going to work in TABCORP's favour. So 2019 is going to be a big year for TABCORP. There's several regulatory changes that are acting in the company's favour. First up, there's a synthetic lotteries ban. I don't know if you know about that. Synthetic lotteries where something like Lottoland, where they have a product where the customers bet on the outcome of a lottery rather than actually buying a ticket directly. And the ban of these synthetic lotteries will strengthen TABCORP's existing lottery monopoly.
Just on that for a second, are they the ones that we've seen a lot of advertising on for the mobile applications where it's greater access and easy to do, and it's betting on the outcome of the lottery, not actually having the license to run it themselves?
So that's Lottoland, as a UK-based company that grew very rapidly doing that. One of the reasons why the government don't like that is they're not paying taxes. So TABCORP pay an awful lot of tax. The New South Wales Lotteries tax, which TABCORP pays $400 million annually. And that's around about 1.5% of total state taxes in New South Wales. So
what we're looking at here on the regulatory risk side of things is actually working in their favour because the government want to protect their own revenue and they're supporting the monopoly conditions and removing those synthetic lotteries.
Yes. So the synthetic lotteries weren't paying any taxes to New South Wales. So the government were actually incentivised to step in and ban these synthetic lotteries and that actually
have the revenue stream running back to the government again.
Correct, but also a little bit of that gets to go via TABCORP's shareholders. I mean, wet their beak there. Similarly, in that, there's also this year we've seen wagering point of consumption taxes put in, and here these new taxes are being levied on the location of the customer, and that's going to act to remove the advantage that online and offshore bookmakers have had over TABCORP due to the low or no taxes being paid. This occurs where if you've got an account with an online bookmaker, you can bet on a horse race or a sporting event and not actually have to pay any taxes on that. So now with these changes, taxes are being levied at the point of where you make that bet. So if you're in Sydney, there's taxes that will now going to go to the government. This is going to result in minimum tax changes for TABCORP, but it's going to add an extra $250 million in taxes being levied at their online competitors. So that very much evens the playing field and really sort of strengthens TABCORP's position there. Additionally, there's some new laws coming in this year, or have come in, that are creating sort of higher barriers for incumbents. And these laws are around sort of marketing and advertising restrictions and the ability for some of TABCORP's competitors to offer free bets, sign-up bonuses, or bet on credit. So whilst we normally score gambling businesses quite poorly on regulatory risk, there's a range of positive things coming through which have obviously designed for the government to raise revenue, but that's a positive for TABCORP.
So the government's going out there and beating up the competition or outlawing them completely. So
correctly, yeah. because they want it, yes, and just leveling up the playing field. So that will really strengthen the TABCORP sort of monopoly positions or market power in the wagering business.
And part of those issues came from technological advancements, development, mobile applications, global mobile internet. So the final point of the quality filter model from Atlas's perspective is technological and operating risk.
Yeah.
What's the view there for this now, TATS and TAB together?
Well, I mean, on the operational risks, I think we discussed that in the business model. It's tough to see any significant reduction in Australians' ability to, or appetite for gambling, and the operational risks for a large diversified gambling company with both wagering and lotteries aren't particularly significant. There's not a lot of operational risk in running a lottery. Where TAB does face technological risk is in the migration of gambling from the stores to betting online or on smartphones, particularly on smartphones. So 10 years ago, if you wanted to make a bet or buy a lottery ticket, your only option was to front up at a TAB shop or go to a newsagents. What we have been seeing is increasing penetration of digital lotteries and smartphone betting, and that's a significant opportunity as well as a risk for TABCORP, as digital customers tend to spend 50% more than non-digital customers. And additionally, one of the benefits for TABCORP is the cost to serve digital customers is much lower, so much higher margin, where if you're buying your lottery tickets on your smartphone, there's no leakage to the newsagent. Similarly, if you're betting on your smartphone app with TABCORP, there's no sort of leakage to the publican, or where TABCORP may pay a fee to have their tab located in a certain pub, or the cost of actually having to physically set up a storefront. So similar to the banks shutting down branches, where as the nature of banking is changing, moving more online, could be the movement to digital combined with some of these regulatory changes is quite a sort of a positive tailwind for TABCORP in reducing their cost base and cost to serve the customer.
Very good. Well, now we see where those near-term catalysts you referenced for the company at 5% fully franked dividend yield and running at 11 times. So we can see the buy there. Thank you very much, Hugh Dive from Atlas Funds Management.
Thanks a lot, Chris.